Hugh is in Sudbury, Ontario. Go ahead, Hugh, you're on the air.
Thank you. David, my question is on Power Corp. I picked up a few shares earlier this year and seems to be doing fairly well. Would you add to this stock at this current price level? They had a couple dividend increases last year, and one of the commentators on BNN said that he expects more dividend increases to come. Are you of that opinion as well?
Right. So again, we're sort of talking about a stock that's been underperforming for several months. Both Power and Power Financial's prices have pulled back a long way from about a year ago. I think it's unclear as to whether these things are going to lead coming out of this correction. At this point, it doesn't look that way. So again, I think that it's difficult. People are looking for yield, and I get that. But at the end, your investment is total return. And if you thought that, for instance, the Canadian investment markets may be less favorable than U.S. markets, I would prefer to focus on a company that's more going to benefit from a stronger U.S. stock market. I like to get paid a dividend, but I would prefer to have something that maybe is more levered to the U.S. Than Canada.
You just think U.S. is more gas right now.
Yeah, it really is, and again, I just can't pick a bottom. I'm not going to say the market should do this. We're 3 days off the lows in Power, and I think that's too early to call a bottom.
Luke in Gatineau, Quebec. Go ahead, please.
Good afternoon, gentlemen. Thank you for taking my call.
Our pleasure.
My question is about Qualcomm. What's your thought on it? Is this a good time to get in, or should I wait? Okay. I'm going to hang up and listen to your comments. Thank you very much. Merci.
Merci.
So this is a great time to talk strategy just for a second. When you go through a correction like we've been going through over the last couple of months, the market gives you a gift, and that is it stress tests all the securities in the market. And the ones that are able to hold up against the selling, clearly it's survival of the fittest, right? So it's like when the tide goes out, you can see where the strength is and where the weakness is. And so if you take a sector like semiconductors, semiconductor sector held up until November of this year, and then really started to get hit this past year, and then started to get hit November, December. If you look at Qualcomm, which makes chips that go into handsets, has been declining for well over a year. So it's been underperforming the sector for quite some time. Now, there's reasons for that. Handset market is slowing. Now, let's look at another chip company like NVIDIA, which just reported their earnings. NVIDIA makes chips that go into gaming consoles, into their graphics chips. They go into mobile handsets. They'll go into virtual reality devices as we go forward. They killed the number. Stocks behaved really well until the end of December, well after semiconductors rolled over.
What's the ticker symbol on that one, David?
Oh, NVDA.
NVDA.
NVDA, okay. So this is a $16 billion company. So I want to buy the companies that hold up better through a decline than the sector. I don't want to buy the weaklings that were weakening going in. So when you go through a correction, the weak ones sell off first, and then the selling impacts the ones furthest and further and further from the problem. So NVIDIA, last to break down, first looks like to break out. I think it looks much more attractive. If you want to own semiconductors, and I do like semiconductors as a sector for the recovery, I would be much more inclined to buy an NVIDIA.
Let's head to Oshawa, Ontario. Don, go ahead, please.
Thank you, gentlemen, for taking my call. I'm just questioning what your guest thought is on Enbridge. I bought it, obviously, for a dividend stock, and basically, I was listening to a lot of your analysts that you've had on in the past weeks, and, a lot of them touted Enbridge as being a good buy, and at the level I got in, which was around the $46, $47 range, it's just been a dog since I've had it. Now, I do realize that there is volatility in the market, and I was looking at that, between that and TransCanada, and TransCanada seems to be outperforming Enbridge. So I just like your guest opinion as to should I get out of this stock and or buy more of this, or what his opinion is. Thank you.
Okay, so Don, it's one of those situations where this is a company that's guilt by association. It's in a tough sector and under pressure. I think the thing that I would say about Enbridge is this is a company with a tremendous balance sheet, so it's going to be there. Right, it's extremely well managed. The assets are excellent. I think that if you get any kind of rally in energy, Enbridge is going to be a leader in this rally from the infrastructure side. TransCanada Pipe probably also, right? So if you're going to buy energy infrastructure, you want to buy the strongest ones, the ones that are best capitalized. And I think that both of those companies would do just fine. I know it got very expensive during the time when everybody was excited about energy, and certainly energy infrastructure. We owned it. We haven't owned it for a while. We don't own it right now. But I think you're going to do fine in this market where we are right now.
We are going to be right back after this short break. Top picks coming up. And David likes the look of an internet giant, a really big one. We'll have that in a couple of minutes. Join us tomorrow on Market Call. Jennifer Radman is on the show. She's Vice President and Senior Portfolio Manager at Caldwell Investment Management. She'll take your questions on US large caps.